later this week. Wall Street seeing NVIDIA profiting from the global build out of AI infrastructure, but still, it's one of the most cheaply valued AI stocks right now. He broke it all down in his brief over the weekend, and following this very close to Yahoo Finance executive editor Brian Sozzi. Brian, how should we be looking at the valuation of NVIDIA?
It looks cheap. I went to the Yahoo Finance comparison tool, one of my favorite pages on our platform, and you can dial up various companies and compare them to NVIDIA. And one multiple, you can see that chart right there. I made it easy for y'all, but I encourage you to go to the page nonetheless because it's really fun to play around with. You can look at the P multiple, 4P multiple on NVIDIA, and you can see it as one of the cheapest, relatively speaking, on a PE basis versus other top AI names. Of course, that's ARM Holdings, you have Marvell there, you have Broadcom, ticker symbol AVGO. And I put this question out to folks on our Morning Brief newsletter on Sunday, getting a lot of really interesting responses since then. I'm going to put out a piece later this afternoon sharing some of those responses, the clean ones and the good ones, I should say. And I think this is what you're seeing. One, you're not seeing estimates or earnings per share estimates really rise for NVIDIA at all. If you go into the NVIDIA ticker page on Yahoo Finance, click on the left rail and click on analysis, and you can see the EPS trends at the bottom of the page. EPS estimates on NVIDIA have not risen over the last 30, 60, or 90 days for the current fiscal year. And in fact, they have declined about 2 cents over the past 60 days for NVIDIA for 2026, which I found very interesting. So in order for it to get a higher P multiple, you normally have to get earnings estimates on the street to rise. Now, the other component for the price to earnings multiple, at least in my view, is sentiment. And you have concerns about DeepSeek, you have concerns about AMD making advances on the chip front, you have concerns about Amazon starting to make its own chips, you have Apple starting to make its own chips. So maybe the street is has priced in some worries on NVIDIA. I think for this PE multiple to catch up relative to other AI trades, NVIDIA is going to have to come out and really do two things. Blow away earnings estimates for the quarter later this week, and then come out in the first quarter or the current quarter and blow away estimates for that as well.
Yeah, Brian, I've read about the volatility aspect also over the weekend
when it comes
to NVIDIA and some of the behavior that we've been seeing in terms of the options market and maybe what that signals. And a lot of that has to do with maybe some of the growth concerns, how much of that has already been priced in. When you talk about the sell-off earlier this week when it comes to DeepSeek and maybe what that signals just in terms of how much of that has already been priced in, and maybe that will just mitigate some of the volatility going forward. But again, when you write about NVIDIA, just given the fact that it's been so important to the market, you do get a lot of feedback from our viewers just in terms of how we should be evaluating. And I think there is a lot of confusion out there just in terms of whether or not it is overpriced still, even though it is relatively cheap compared to some of those other AI trades.
Yeah, and I was thinking to ask you this, Brian. It seems like the market is both always happy and never happy because they're worried about NVIDIA's valuation, but then when it comes down, well, is that a sign of a bearish signal for NVIDIA that's not going to correct itself moving forward? So which one is it?
Well, let's be clear. If NVIDIA comes out here and does not have good guidance and the earnings doesn't go well, NVIDIA is still very, very owned by institutional managers all over the world. It's like their favorite company. So the broader market will be hurt. But look, I talked to Louis Navalier this morning on my Opening Bid podcast. He made a great point, and it's a very simple one. NVIDIA is a monopoly. It's unstoppable. Now, I don't necessarily agree with NVIDIA being a monopoly. There's AMD and there's other companies competing, but still, they are so far out in front of everyone. And while NVIDIA stock may trade at a discount relative to other AI names, the stock still trades at a relative premium to the S&P 500 at about 23 times. And that is a deserved premium. NVIDIA over the next 2 years may grow earnings at about a 50% to 75% clip. So all in all, pretty good for NVIDIA.
All right, well, Brian, we're about to talk to an NVIDIA bear about this, so it's going to be a great conversation.
Good luck with that one. I'm going to stick around and watch this.
I know. You're going to be our biggest fan. All right, Brian Sozzi, our own executive editor, thank you so much. Well, AI heavyweight NVIDIA is set to report results after the close on Wednesday. For those thinking of buying the stock before earnings, we've got to look at what your return could look like based on past performance. Here with the Breakdown Markets and Data editor and host of Stocks in Translation, Jared Blickery. Hey, Jared.
Hey, Maddie. Well, we've been talking about the breakdown in the Mag 7, and let's talk about the poster child, NVIDIA, down 10% for the year, and we're just showing a year-to-date chart. This is frustrating for traders, but we've seen this before, and a lot of times the earnings has been a catalyst for both the bulls and the bears. So let's break down the earnings reactions over time. I'm going to go back 10 years here, and I'm looking at the average and median returns various time frames after the report. So here is 1 day. You can see a median result of 3.4% to the upside, For 1 week later, it's a median of 4.3%, and for 1 month, pretty much sticking within this range, also 3.4%. And you can see the percentage positive going pretty sideways as well, 63, 68, 60. Anything less than a 70, I don't